Welcome back. Well, you're still tuned into Chartbusters on CNBC-TV18. It's turning out to be a session where it is definitely the broader markets which are outperforming at this point in time. So let's, at this point, discuss some of these broader market stocks. We have with us B Ramesh Babu, who is the Managing Director and CEO of Karur Vysya Bank, joining in to discuss the quarter gone by. Mr. Ramesh Babu, thank you very much for joining in. Well, first let's start with the asset quality. It is something which is most closely watched for most banks. Slippages have risen around 37% on a sequential basis. It's come in at over 220 odd crores in the quarter gone by. Can you tell us where exactly or which segment did you see the slippages from, and what might your quarterly run rate be going into FY24?
Yeah, first of all, thank you very much, and good morning to you. So this year is a memorable year for the bank because it's a historic year where we have crossed the 4-digit profit first time in the history of the bank. That too, not just 4-digit, 1100 odd, we have crossed it. And many of the parameters like business growth, asset quality and profitability, every parameter critical, what all is there, what all guidance was given by the bank, we are in line with the guidance. Now coming to the asset quality, I can say it's one of the best quarters for us. If you look at our SMA 30 plus, it is just 0.56. And overall, for the whole year, if you look at it, the negative slippages are negative for the whole year, and the net NPA is also at 0.74. So here and there, some accounts here and there come up and all. That's not going to matter a lot because overall, for the whole year, if you look at it, it is absolutely a wonderful year as far as asset quality is concerned.
Okay, all right. Hi, Mr. Babu. You're saying it's a wonderful year, and I said it quite a few times. But what's the way ahead? Slippage ratio, what should it be as a percentage in the coming year? And also, if you could give us a sense on credit cost.
I'll tell you. Yeah, this year, if you look at it, our slippage ratio was around 0.75. But whatever it is, the year, how it passes through, we do not know. That's the reason cautiously we have given a guidance of around 1% would be the slippage ratio for the coming year. The credit cost also we gave around 0.75% would be the credit cost for the coming year.
Okay. You've done quite well, based on what you are guiding. What is your outlook on the net interest margins? Because there's been a marginal improvement Q on Q as well. You've closed at around 4.37%. Tell us what you are probably targeting. Is 4.5% to 5% on the cards?
No, actually, let me tell you, this 4.3 also, because we are able to contain the cost of deposits well and yield on advances because of the passage of the MCLR and EBRR to a maximum extent, we have got the yield. From now onwards, we don't think these cost of deposits will be able to contain that. It may go up in the whole year by around 40 to 50 basis points. That's the reason we gave a guidance that. So the net interest margin in the next 2 quarters, where we have some amount of visibility, will be around 4%. We'll be able to maintain that.
Okay, all right. Mr. Babu, what about loan growth? I think you were guiding for mid-teens. Could you tell us what is that number we should work with, or if you want to give us a range? And also, what will be the split up? What will be the driving factor between corporate and retail?
Yeah, loan growth, we have indicated around 14% plus growth will go. So now the focus of the bank is on the commercial as well as in the retail and to some extent in the agriculture. Corporate book, which used to be around 30 to 34%, it has come down to 21%. So because the yields are much better in the commercial and the retail segment, we will focus on that and we will try to retain the corporate book around 21%. Okay. And commercial is at 33% now.
Okay. Mr. Babu, you're sounding extremely bullish going into FY24, at least in terms of parameters such as asset quality. Tell us, what do you think might be the biggest red flag or the biggest risk that or headwind that you could probably expect going into FY24 for the bank?
That's what the economy, it depends on the economy. If the same position continues, more or less the measures what we have taken last year, we have taken many measures. We have strengthened our collection mechanism. We have created a structure wherein right from SMA 0 itself we started monitoring. That has yielded the result. If you look at our numbers compared to March 22 to March 23, both in terms of percentage as well as the absolute numbers, though we have grown in advances, our SMA 30 plus has come down. So that way, if you look at rest of the sectors also, more or less with the digital lending model, what we have kept, so checks and balances sufficiently are there. That's why we thought that the underwriting as well as the collection, these two together, if we do it properly, so we'll be able to manage the asset quality well during this year too.
All right, very quickly, and your ROA will be maintained at around 1.5%?
Yeah, 1.5 plus.
Okay, all right, Mr. Babu, a good chat with you. You're sounding extremely bullish. We wish you as well as your team a good FY24 ahead, and we'll hold you at all these numbers that you're giving us. Have a good day.
Absolutely. Thank you.
For the time being, though, we'll slip into a short break. On the other side, we'll continue our focus on markets and stock-specific action.